Hello everyone, welcome back to my YouTube channel. So in today's video, we're going to make a review on this beautiful trade that you see on the screen. This is a trade that was taken by one of my colleagues in the last week. So we're gonna make a complete review on this trade, on the fundamental and the technical part as well. So stick around until the end of this video because this video will help you to understand a lot of things. So without further ado, let's get started. So we're gonna start with the fundamental part first and to try to understand the every fundamental reasons behind this move and the every fundamental reasons why we have taken this trade, and then we'll head over to the technical part as well. And I totally understand that fundamental analysis can seem really overwhelming at the beginning, but this is the reason why my team and I have been working so hard during this last 3 months on a project. This project is called From Fundamental to Technical. So basically it is a master class intended to help you traders to catch high probability trades like this one and hold the trade with confidence and understand every reasons behind every move that the markets make. We have put so much effort and so much work on this project in order to make it a really high quality, to help you to understand the fundamental and the technical analysis in order to make you a more complete trader and catch high probability setups like this one, like the one that we are going to review in a minute. So I'll keep you guys updated in my Discord and my Telegram channel. So if you have not yet joined my Discord or my Telegram channel, I'll leave the link in the description box below. So let's come back to our setup. Fundamentally speaking, there were only two reasons behind this trade here. The first one was the US and European Union trade deal, which was the major market driver during that time that we have taken the trade. So actually we have taken this trade on the night of July 27th, and this was exactly the moment where Donald Trump has tweeted that they found an agreement on the trade deal with the European Union. And at first, every traders and most of the investors thought that it will have a positive impact on the EURUSD because this was what most of the investor has been pricing in the market. So reaching an agreement with the European Union would put the EURUSD to the upside trend. But few minutes later, the actual deal came out and we saw the terms of the deal, and it was absolutely not good for the euro. In this deal, you can clearly see that the one that will have a big benefit from this deal is the United States, not the European Union, because it includes that the European Union would invest more than $1 trillion in the United States, and also their expectations will face tariffs. So this is definitely not good for the European Union, but it is so good for the US economy. So it will have a really positive impact on the US dollar and a negative impact on the US dollar. So at that time, we already knew that the EURUSD will go absolutely down here because the fundamentals lines up for the decline of the EURUSD. All right. So now all we need to do is to find an entry point using the technical analysis. And as you can see here, we didn't need to make a great technical analysis here since the market was completely bullish here. And by the time the US has agreed on a deal with the European Union, you can clearly see that the market has broken at this latest higher low here. So basically this is a change of character. So now we would start looking for sell opportunities. Okay, so you can see here the market has already taken this inducement here. So now all we need is to identify a valid order block. Then we have this order block here. Let me zoom a little bit close in. We have this order block here which was clean and mitigated. Okay, and you can see the market has mitigated exactly over here, and at that time the US has not yet agreed on a deal with the European Union, so we couldn't take a trade only based on this order block here. We need a fundamental driver behind it, and just a few minutes later, or like under an hour later, the trade deal came out, and then we could definitely take a trade here. But the problem is that this order block was already mitigated, so when the market came here, we couldn't take any more a trade based on this order block here. So we have to find another entry confirmation. So we use the single candle order block. As you can see here, this candle has come to swipe to collect the liquidity of these early sellers here. You see all the traders that have taken this trade only based on the mitigation of this of this order block would have been stopped out here because the trade deal was not yet made public. So yeah, this is the first save of the fundamental analysis, as you can clearly see here. So after that, all we need to do is to wait for the market to create this, to confirm this single candle order block here. So the first thing here, the market has already swiped this liquidity. The next thing is to wait for the market, the next candle, to close below this white candle here. So let's see the next candle. We saw that the next candle has completely closed below it, and then we have our valid single candle order block here. And this single candle order block is really high probability because it has collected the liquidity of the early sellers of this order block here. Okay, so this one here was a really high probability. So all we need to do is to wait for the market to come back to this single candle order block, then we can take our sell here. Okay, so let's wait and see. And we can actually see that the market came back to mitigate our single candle order block, and the market has started dropping here. And basically not because of this single candle order block, but because of all of the fundamental reasons behind this move here. Okay, so the single candle order block was just an additional confirmation or a technical analysis to help us to find our entry point, but the main reason was the trade deal between the US and the European Union, not the swipe of this liquidity here. Okay, so you can actually see that the market has dropped. You can actually see that the market has made a sharp drop, even way farther than we expected. Okay, as you can see, we have easily secured a 1:5 risk reward ratio. And one other fundamental reason that I forgot to mention is the trade sentiment. As you can see in this picture here, at the time the trade deal came out, most of the retail traders were planning to buy at this level here. As you can clearly see on this picture here, the numbers of sellers start decreasing and the numbers of buyers start increasing on EURUSD because they were not following the fundamental analysis. But on our side, we were following the fundamental analysis and we knew that the market will go down. So as I always told you, never follow the retail sentiment, because most of the trade, 90% of the trade, always get wrong in the market. They always lose their money in the market. So if you see most of the retail trader doing something, buying massively an asset, just go counter trend, because most of the time the market will just stop them out. So in this example here, you can see that most of the retail traders were planning to buy at this time, at the moment this trade deal came out. But as you can actually see, this trade deal will put pressure on EURUSD, and this is why we have a rather sell the EURUSD against the majority of the retail traders. Okay, so these are basically the reasons behind this trade. So the first one is the fundamental reasons, the trade deal between the US and the European Union, and the second one is our entry here. We have used the technical analysis, we have used single candle order block in order to catch this trade here, and this was like very beautiful trade here, and we could have made more profit by holding this trade, but we just followed our trading plan because our risk reward ratio, our initial risk reward ratio was 1:5, and when the market has hit it, we just closed our trade, and yeah, we have secured our profit here. So this is basically how you can use the fundamental and the technical analysis together in order to catch high probability trade and hold your trade with confidence until they hit your take profit. So stay tuned. I'll keep you guys updated in the group about the upcoming masterclass called From Fundamental to Technical, that will help you to catch high probability trades like this one here and help you to become a more complete trader. So thank you for watching till the end. Stay tuned and see you the next time.